What changed after the Jobs Act and why private markets exploded? Before 2012, the private capital markets were largely closed to the general public. If you weren't wealthy, well-connected, or part of institutional finance, you simply didn't participate. That changed with the Jobs Act. Today we're going to break down what the Jobs Act actually did, why it reshaped capital formation, how it expanded investor access, and why private markets are now growing faster than public ones. The pre-Jobs Act world. Before the Jobs Act, general solicitation was illegal. Private offerings happened quietly, capital access was limited, investor pools were small, public markets were the main growth target. This created inequality in opportunity, not just wealth. The purpose of the Jobs Act. The Jobs Act had three primary goals: increase capital formation, expand investor access, reduce regulatory friction for small businesses. It introduced Regulation D506C, Regulation Crowdfunding, Regulation A expansion, testing the water provisions. Each of these reduced barriers. The impact on capital formation. After the Jobs Act, private capital raises increased dramatically. Public IPOs declined. Companies stayed private longer, but investor participation broadened. Private markets became the dominant growth engine. Why companies prefer private markets? Private markets offer flexibility, speed, control, tailored disclosure, strategic investor selection. Public markets offer liquidity, but they also impose pressure and volatility. Many companies now raise privately for years before going public, if they ever do. Why investors entered private markets? Investors moved into private markets because public market returns compressed, volatility increased, private deals offered diversification, minimum investments dropped, and access improved. Crowdfunding platforms accelerated this shift. What does this mean going forward? Private markets are no longer niche, they are mainstream. Capital formation, investor education, and regulatory literacy are now critical skills. Your key takeaway? The Jobs Act did not remove regulation, it modernized it, and in doing so, it unlocked the largest expansion of private capital participation in U.S. history.